Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good afternoon. This is Your Stocks. I'm Bangla Malu. With me is Ekta Batra. But just for the markets, if you take a look at it, the Nifty fell below the 10,700 mark, saw some stability there, but now we're seeing a second round of selling. Now we're at 10,688 for the Nifty. A lot of the stocks which are extending their cuts from today's trading session itself, HPCL, BPCL, IOC, all the oil marketing companies at the low point of the day. And as we speak, ICICI Bank too has slipped towards the lower end of today's trading session. If you take a look at UPL, that one's been a weak stock all through this month, all through this year. That one too is at the low point of the day. From the mid-cap space, again, nearly 7 stocks in the red for 1 in the green. EIL is the one that swum onto my Ken. That one's seen a sudden drop and it's trading at the low point of the day. EIL is the one that should come up for you. Hi.
Hi Manglam, yes absolutely, but I think a lot of what we are seeing on the screen this afternoon is because of what's happening with the global markets. It's a sea of red if you talk about the global markets at this point in time. The Dow futures, for example, is showing that it could be a weak start for the US again. It has been really topsy-turvy, and currently the Dow futures is indicating that it could be a cut of, or it is indicating a cut of around 200 odd points. So let's see how that pans out. And if you're talking about the Asian markets, we had Hang Seng, which was down around 500 points plus. We have Shanghai, which has been underperforming because of all of the trade war fears. So that seems to probably be the dominant theme. And to make things worse for India, we have oil prices which rose overnight in yesterday's trading session. Plus we have the rupee, which is at multi-month lows. So it seems it is this cocktail of what might happen with the trade war plus the macro concerns which seem to be weighing on our market. So currently the Nifty in fact has slipped below 10,700 quite formidably. So it's currently at around 10,679, with the mid-cap index starkly underperforming as compared to the Nifty. In fact, on a year-to-date basis, the mid-cap index is now back down to around a 13 to 14% cut. But joining us this afternoon, I'm sure we have a lot of queries coming in from our retail viewers. Mayuresh Joshi on the fundamentals and Sandeep Bagle to answer all of your technical queries. Afternoon, gentlemen. Sandeep, let me just pose a technical question to you first. For the Nifty, what are the levels that you'd be watching out for, and what's the strategy that you're adopting now?
Afternoon, Ekta. I still think there is some more downside, because at 10,700 having been broken and it is staying below that, I see at least a 50 to 70 point downside. 10,630, 10,600, somewhere around that, the Nifty needs to test. And on the upside, I don't see 10,700 being broken.
All right, so you don't see 10,700 being broken on the upside. Interesting, given that that has the maximum open interest as far as puts are concerned, just 1 day ahead of expiry. A lot of the mid-cap stocks, they are seeing a sharp amount of decline as we speak. Mayuresh, any of the mid-cap stocks which, according to you right now, after this sharp decline, look like a value bet?
Afternoon, Mangalam. I think you probably need to stick with quality, specifically within the mid-cap universe, or specific themes which are more domestic oriented at this point of time. So a large consensus in terms of what we probably are liking within the mid-cap universe would be consumption-led or consumption-driven stocks, where the earnings growth can be quite stupendous over the next few quarters, barring aside a few quarters where you might see underperformance because of the markets. Having said that, I think stocks like a music broadcast, where our own belief is that the news stations have broken on the EBITDA level much earlier at 15 odd months before 2.5 years. That's what the management had indicated. The second element in terms of the ad volumes growing reasonably well, the news station yields have probably also started improving, and at the same time I think the legacy stations have shown an improvement in yields as well. So I think earnings growth in excess of 33 odd percent. I think the stock has gone beaten now, and this looks like an interesting play. Again, I think within the broader, larger universe, stocks like Nilkamal, for example, market leadership position in plastic molded furniture, is something that should probably hold the stock up, because a significant contribution of revenues comes from this vertical itself. You've seen significant growth happening. A large part of the unorganized market will shift to organized players like Nilkamal. And again, I think from an ROE perspective, it looks interesting. So you're following a bottom-up approach, but these couple of ideas probably on declines looks like interesting. It looks very interesting to us from the mid-cap universe.
Okay, fair enough. Well, let's get in a couple of queries now. First up is Akash Kumar, who writes to us from Pune. He wants to know The long-term outlook on the Nifty. Well, long-term outlook on the Nifty, I don't know what the long-term view would be here, and whether it's a 3-year view, whether it's a 2-year view. But in any case, Mayuresh, if you had to take a short-term plus medium-term perspective on the Nifty, what would it be?
Well, I think you summarized it perfectly, Ekta. I think what is probably happening specifically from a short-term perspective in terms of volatile oil prices, the earnings growth in the quarter gone by. I think if you leave aside BFSI, and again within BFSI, the private space and oil and gas, I think the earnings growth has not been great. So again, I think global conditions, what happens with Fed rate hikes, you're probably looking at sticky conditions happening because of oil depreciating rupee, and that can probably create some amount of havoc in terms of our twin deficits. Inflation again with food inflation probably expected to stay under control with better monsoons. I think the RBI on an upward trajectory. So I think the near-term perspective in all such macro headwinds probably looks a little bit sticky and soft for Nifty. But the larger perspective for the Indian economy probably still remains extremely robust in my opinion. I think earnings growth should revert back to the 13-14% growth over the next few quarters. You're probably looking at, as I said, inflation cooling off, which again will give respite on the inflationary and the macro headwinds front. And the third element in terms of global volatility, I think the global volatility also should probably start smoothing out over the next few months.
Sure.
So the long-term prospect obviously remains very, very robust for the Indian economy.
All right, long-term prospects still very robust for the Indian economy. Let's move on to the next one. We have Prasoon Banerjee writing to us from Kolkata, wants to invest 1 lakh rupees for the long term, wants advice on a few stocks. Sandeep, a lot of the stocks, they are hitting record high even as the Nifty is weak in today's trading session. So what are the charts do you think that really stand out in terms of, being or beating the market in the long term? If one had to take a call and put in 1 lakh rupees in the market right now, which ones are the ones which you would bet on or recommend him to perhaps put his money there?
Mangalam, I would talk of a few stocks, HDFC Bank. These are stocks which are outperforming even in the current markets. Jubilant Foods, maybe a little bit of a correction that is possible, that is still looking good. Very, very comfortable buying these stocks. HUL on a correction, that is a stock which I would talk of. I don't see the stocks correcting more than 5 to 7%. From those levels, you can have a stop loss of 10%, and I would talk of a 15 to 20% upside over the next 8 to 10 to 12 months.
Okay, so you expect around a 15 to 20% upside on a lot of these consumption stocks which are already sitting at fresh record highs. But Mayuresh, if you had 1 lakh rupees and you had to build up your portfolio, say for a longer term perspective, which are maybe the 5 or 6 stocks that you'd invest in?
So again, largely looking at the looking at market conditions, I think I'll probably be putting it in a very staggered way over the next few weeks. A large element in terms of sticking with quality and high pedigree names is something that I would suggest any investor with a long-term perspective. I think out of the large cap names, Maruti, for example, in our opinion, should stand out both in terms of the utilizations at their Gujarat plant ramping up, and again, I think the cost optimization programs continuing. The leverage should play on their balance sheet in terms of earnings growth. I totally concur with Sandeep. I think HDFC Bank also probably remains one of the high pedigree stocks in terms of earnings growth. Our own expectations are 20-22% earnings growth over the next few quarters. Within the broader universe, again, as I said, in the NBFC space, within housing finance companies, Diwan Housing is something that we will continue to like, both in terms of the advances in earnings growth in excess of 30% is what we peg. Very comfortable in terms of capital adequacy. The NIMs might soften a little bit because of the yield movement that you've seen, but the overall valuations look very, very attractive.
Okay. Well, we have one more query, but I just want to read it out because I'm sure the person wants to know. Kiran has written to us from Kolkata and he wants to invest 50,000 for the long term. What's advice on a few stocks? Well, Kiran, we just spoke about this particular question. So we have had Mayuresh and Sandeep answer. Sandeep, for example, recommended HDFC Bank, Jubilant Foodworks. So maybe you could probably look at a couple of stocks and even HUL on a correction. But that was Sandeep's advice. But as of now, we need to take a break with the news that the Nifty is currently at 10,680. We have the Midcap index, which is down over 300 points. So that's really the big pain point for today. And the Bank Nifty underperforming as well. More stocks on the other side. Stay tuned. Welcome back. Well, a lot of stocks declining within the broader markets, and you can tell that by the breadth of the market as well, where we have around 460 advances to over 2,200 stocks which are declining on the Bombay Stock Exchange. So that equals to 1:4 in terms of an advance decline ratio, and gives you a sense in terms of the kind of breadth and selling pressure that we're seeing for the broader market. So if you're talking about specific stocks, CG Power, for example, is down around 12% at this point in time. We have Indico Remedies, where in fact not that much in terms of volumes, but in terms of price action, at least that stock is down around 12%. NBCC has extended its losses to around a 9% cut, and even something like a Prabhat Dairy is seeing profit booking. So that stock is down around 8.5%, and Adani Transmission at around 151 rupees now, that stock is down around 7.5%. So it gives you the type of stocks which are declining also probably seem to be a little bit high beta in nature. But let's get a couple of more queries in. We have JP Gupta, who calls in from Delhi with a question, has investments in Yes Bank. Hi, Mr. Gupta.
Hello.
Hi, your queries on Yes Bank?
Yes.
Go ahead.
I'm holding 275 shares of pre-split at the rate of 331.
Okay. So you're currently sitting just about flattish at this point in time on your investment. How long would you want to hold it for?
Still, I'm holding for last 4 or 5 years. Still, I'll continue.
So pre-split, basically you've more than doubled your money. So pre-split 331 would imply close to around 165 rupees that you paid for Yes Bank, and the current price is 333. So we'll just ask our producers to fix that.
Okay. So there's an adjustment.
Yeah, there's an adjustment that needs to be made. His buy price is closer to 165.5 rupees, I believe.
Okay, but in any case, Mr. Gupta, how long are you okay with holding Yes Bank for from here on?
I'll hold for another 1 to 2 years.
1 to 2 years. All right. Mayuresh, what would you recommend on something like a Yes Bank? Generally quite steady in terms of fundamentals. It has faced obviously a couple of problems, but overall, what would you recommend vis-a-vis other banks?
No, so I think he's in the money, and at the second time, again, I think in terms of his horizon, he's comfortably placed. So in that respect, again, the cost-to-income ratios on a fundamental perspective for Yes Bank comfortably perched at 42.8%. In terms of the RBI divergence itself, out of 6,350 odd crores, the outstanding restructure just stands at around 2,650 odd crores. So the net stress assets around 1.73% of the overall advances. Again, in terms of credit costs, very, very manageable at this point of time. And a large element in terms of expectations of their advances growth to be in excess of 30-35 odd percent, earnings growth to support that in excess of 30-35 odd percent, holds the stock in good stead. So I think ROA is at 1.7, ROE is at 17.7, and there is no reason to complain why Yes Bank cannot continue with its stupendous growth. So since he has a long horizon, I think a clear hold from my side.
All right, Mr. Gupta. So the verdict is clear from Mayuresh's end. You're sitting on money, hang in there, and you have a long horizon, so there's no reason for you to sell. With that, just keep an eye on the markets. In fact, our ticker team alerting us that the rupee is at the low point of the day, opened at a 19-month low, and now it's at 68.60. So we will watch out for that. The market's extending their cuts nearly 1% on the Nifty, 100 points lower, and now even the stocks that held on are selling off. If you take a look at HDFC Limited, Bajaj Twins, Bajaj Finance, as well as Bajaj Finserv, both of them have moved to the low point of the day. Of course, we've had L&T, which was under pressure all through the course of the day. Now that one's moved to the low point of the day, and Tata Motors and the likes, which were already weak, are extending their weakness. So we will watch out for that. But the stocks that are losing the most right now are the oil marketing companies, a near 7-8% loss on BPCL, IOC, as well as HPCL. So let's move on to a CNBC TV 18 exclusive from that space itself. We learned from sources that the oil minister is mulling relaxation of production sharing contracts of pre-NELP and NELP blocks. Anshu Sharma joins in with more details. Anshu, go ahead.
Right. Sources suggest that oil ministry is looking at streamlining production sharing contracts of pre-NELP and NELP blocks. We understand that government is looking at making sharing of royalty and cess in proportion to participating interest in the contracts. Like in 7 pre-NELP blocks of ONGC is liable for entire burden of royalty and cess. Remember, this will have an implication on as many as 26 discovered blocks, 26 explored blocks under pre-NELP, and 254 blocks under NELP era signed by the government. We also understand that Oil Ministry is mulling to give an extension for exploration by 2 years in the northeastern region. It also plans to give marketing freedom in terms of pricing for natural gas produced in the northeast. The aim is to bring in ease of doing business by reducing delays and discretionary powers and help increase oil and gas production, as government believes that production sharing contract timelines, ambiguity in several provisions are hampering exploration and production.
Okay, all right, Anshu. Thanks very much for that. We need to take a break now, but more queries once we're back. Stay tuned.
Well, 350 points shaved off the mid-cap index. Balrampur Chini sitting with a cut of about 3.5%. Cholamandalam Jet Airways now down about 5%. And DCB Bank, that one too not spared, down about 3% at the low point of the day. So the bleeding in the mid-cap space continues. The Nifty down about 100 points, as well as the Sensex down closer to 260, 270 points as we speak. So let's get in some queries as well. Lakshmi N, writing to us from Tamil Nadu with a query, has investments in Rain Industries, holds 55 shares at 353 for the last 2 months. As a short-term investor, wants to know whether to hold or sell. Sandeep, Rain Industries, thankfully she's saved herself the blushes by, she did not see the bigger fall come by on Rain Industries, but still losing a fair amount of money. What would you say for the short term? Stay away, book losses, or maybe average at these levels?
Mangalam, certainly not averaging at these levels. Booking losses, whether now or on a bounce, 230, 235, can't say whether that will come. So 170 is a safe stop loss. And in case 170 is broken, the stock can go down to 140 also. So that call she has to take.
Okay. Mayuresh, any fundamental view on Rain?
No, sorry, Ekta, I think this stock is outside our coverage universe.
Okay. All right. Well, we have another query.
Yep, we do. We have Saloni Gupta writing to us from Delhi, holds 57 shares of Bharat Dynamics at 418 rupees. Since the IPO, long-term investor wants to know whether to hold or sell. Mayuresh, do you track Bharat Dynamics? A view on that?
No, unfortunately, I don't, Mangalam. The alternate stock that I can suggest is Aditya Birla Capital. Again, I think the fall has been stupendous in this stock. But the entire theme in terms of financialization of savings is something that would play out beautifully for this stock over the longer term. The NBFC loan growth is stupendous. The NIMs are probably around that 4% mark. It might come out for a tad bit, but again, I think the growth looks very strong. The AUM growth in terms of equity assets under management are extremely strong. The NBFC arm and the housing finance arm are doing exceedingly well, and the life insurance arm has broken positive on the VNB margin front.
Okay.
So on a SOTP basis, I think looks interesting.
Okay, well, thanks, Mayuresh, for that view. But we do have the Manpasan numbers which have come out, and they've just hit the exchanges. Let's just go through that. For 3 months ended, they have reported a profit of around 42.74 crores. I'm not sure if I'm looking at consolidated.
Yeah, that's right, 42.74 crores. This compares with 31.3 crores.
And I think the audit report would be the most important at this point. So let's just go through that also in just a minute. But if you can just go through the numbers, Mangla.
Well, I was trying to look at the audit report, Ekta. While you're looking at that, the revenue from operations has come in at 385 crores. That compares with 273 crores. And 273 minus 6 crores, that would be closer to around that 267 crores. Revenue growth has been good. EBITDA as well looks like it is good, because 517 is the profit before tax as compared to 360. Rather, 36.1 crores is the profit before tax in the corresponding year. 51.7 crores in this quarter itself. For the whole year, they've made a profit of close to around that 100 crore mark, and that compares to 72 crores. We'll have to look at the audit report, to be very honest, because these numbers, I'm not sure how the street will take these numbers just by themselves.
Yeah, but it doesn't say, I don't think the audit report has brought out anything too negative just based on the first glance that we're seeing, and maybe that's exactly why the stock is probably spiking up. But at this point in time, we're going to wrap up the show. Closing bell will take all of the action forward and the news on Manpasan as well. Thanks for watching.